Welcome to the Real Estate Power Play Podcast, your launch pad for skyrocketing success in real estate investing. I'm your host, Gabe Rodarte, alongside Mark Monroe. We're ready to bring you transformative stories, groundbreaking strategies, and the insider secrets of real estate giants. Get ready to accelerate your investment journey and become a true power player in the world of real estate.
Welcome to another episode of Real Estate Power Play. My name is Mark Monroe, your host this week. If you are listening to us on one of your favorite podcasts, please like, share us, comment. If you're listening to us on YouTube or any of the social media, please like and share. And if there's anything that you want to listen to a little bit more about us, please feel free to send us a message. But I'm excited this week. We have a great company, great group that's helped me out and helped many people in my members and different people that are referred over. We have Brent Carlson. Brent, I'm going to have you go ahead and introduce yourself, introduce Lenny, talk a little bit about your company. How you doing today? And why don't you tell us a little bit about yourself?
Thank you so much, Mark, for the introduction. I'm very honored to be part of another one of your podcasts to share and enlighten and inform, real estate investors, entrepreneurs, what options they have available, what's the best way to protect yourself, tax advantages, strategies, and then ultimately leaving that legacy behind, because that's why we're all working so hard. Our company, Corporate Capital, we set up everything from corporations and LLCs in all 50 states. We also are a registered agent in all 50 states. My partners are CPAs and accountants, so we do a lot of bookkeeping, accounting, and tax for the real estate portfolio or individual assets or personal tax returns. Once we look at the structure of our clients to make sure that everything is handled and set up properly, at that point, we will start looking into estate planning and what type of trusts make the most sense for you at this time and in the future. And Lenny is one of the attorneys that does the trust for the company. So he'll help with the living trust, the irrevocable asset protection trust. And there's a couple other trusts that he'll go over with you today that it may be in your best interest, depending on what your current portfolio looks like. Obviously, a revocable living trust is something that I recommend to everyone, regardless if they have LLC formation or not. But we will cover the corporate structuring, the best states to incorporate in. I'm going to touch briefly on the BOI reports, because a lot of you who are listening or watching this podcast already have LLCs and corporations in place.
Lenny,
Yes.
I'm sorry, Brett, I got a question. Why don't you kind of explain what that is? Because some people may not even know what that is yet.
Yeah, so the BOI report, last year, the Department of Treasury put in a new division called FinCEN. And that new Department of Treasury division is requiring all corporations, LLCs, anyone who owns 25% or more of an entity must file this beneficial ownership interest report. It's really frustrating for me that they have to file this, because in my opinion, all of that is filed on the tax returns when you're doing it properly. But it's another way for them to try to get more information on who the business owners are, see if there's any foreign activity. So this BOI report has become mandatory by the federal government. Anyone who owns 25% must be listed on that report. Anyone who makes a major decision for the company or is on the bank account or can sign on behalf or make any major decision must also be listed on this report. If you don't file this, a Corporate Transparency Act, so it's called the Corporate Transparency Act, and it's a beneficial owner information form, so BOI. If you don't fill that out and you had an entity formed prior to January 1st, then they are imposing a $500 day fine until you actually file that report. So at the end of the year, by the end of January of 2025, you could be looking at a $15,000 penalty per company that you have by not filing this report. So our company, we have put together a compliance division. We hired a new staff to actually control and file these reports for our clients to make sure that everything is being done properly. Because when the document came out, it was a 58-page document that they wanted us to read and understand and make sure that we comprehended everything that needed to go into that report. So what we did is we had our team look at it. We put together our own questionnaire and the information we need in order to file those on behalf of our clients. And then they do require like a government issued ID. So there's different identification and different questions that must be answered a certain way in order for you to do it correctly. If you don't do it correctly and it gets rejected and you're late, then you could have those penalties be imposed. Now, the scary part about that is it's $500 per day penalty. They can also impose a $10,000 fine and up to 2 years in prison. And when I read that, I thought, I can't believe they're doing this, but they're trying to make it to where no one is questioning it. Everyone's going to file this report. With that said, I will tell you currently, companies are looking at it and they're talking to clients individually to see how they feel about filing this report. And the reason I say that is in Alabama currently, the federal courts of Alabama are trying to block, and they have put a temporary block on filing these reports, saying it's unconstitutional. However, on the FinCEN website, they are not saying that those reports are temporarily suspended. So they are still expecting those reports to be filed. So we're kind of in between a rock and a hard place to determine, do we file those or not? Now, for most of you who have single member LLCs, holding real estate, I would recommend proactively filing those reports because it's a one-time filing of this report unless you change ownership. So if you bring on another partner that has more than 25%, then you would have to update that BOI report. If you moved, if you got a new driver's license. So there are a few things that you have to address if you make those changes and then file an additional report. But we will help our clients file that initial report to make sure it's done correctly, kind of put the liability back on our company to say, hey, we're the ones that are going to go through the questions with you, make sure you understand who needs to be listed on this report, and then we will file it on your behalf. But it is something that became mandatory as of January 1st of this year. Now, the companies filed prior to January 1st have until the end of the year to file this report. So we have a little bit of time to wait to see how it plays out in the state of Alabama and with the federal courts. But for any new entity that gets filed in 2024, it's either 75 or 90. I think it's 90 days where you have 90 days to file that report. So again, when we help our clients set up an LLC, and even if you set up an LLC on your own and you need help filing this report, especially my commitment to Mark and to his group. If you have questions about that and you want to make a determination, should I file it now or wait to see how it plays out? I'm happy to talk to you about that. I did file some of my LLCs in January before this came out. I'm not concerned about it. Again, some people want to avoid it completely and others just want to file it and have it behind them. But it is a new division that was put in place to make sure that they capture all of the information on the company and not just on the tax return itself.
Good stuff. Whoops. Thanks for that's great stuff. Good stuff.
Talk a little bit about corporate capital. Just give you guys a quick little background about my company and why we are called corporate capital. Even though we do a lot more, corporate structuring and taxes and estate planning. When I started my company, I actually built my credit on my individual entity and actually got a loan that I turned into a 7-figure business and kind of grew from there. And without that opportunity that year, it would have been very difficult for me. So I want to touch on that briefly to see if there are people out there that have long-term existing businesses, income and expenses going through there, and ultimately see if that can also help you and give you another additional source of capital if you're needing it for an investment. Because I just recently did that for one of my purchases in a building in Utah, and I did it through the business. I was able to secure a line of credit through the company, and I was able to do that by building the credit properly. So we'll touch on that a little bit. As far as the series LLCs, I love series LLCs. And if I'm being transparent as a business owner, we set up LLCs. So, Mark mentioned 10 properties. If in a perfect world for an organization like Corporate Capital, you would want your clients to probably form 10 separate LLCs because there's more opportunity, but that's not what it should be about. When it comes to a good partnership, when it comes to someone who's helping you structure yourself, you should simplify as much as you can, because if you have those 10 LLCs to separate those 10 properties, then you are looking at 10 annual renewals, you're looking at tax returns, you're looking at fees that get really, really expensive. And like Mark said, if you do have more than one property inside of that LLC and something happens, someone slips and fall. I've had a drowning, I've had black mold. I've been in the industry nearly 20 years now, and I have seen, all of that take place. So it's just it's very important. Sorry, I just lost my train of thought there.
Well,
Uh,
I'm going to ask
so
you a
with the
question.
series LLC, no, real quick. So with the series LLC, you can have different cells underneath each series. So for example, I have clients here in Nevada who have multiple properties, anywhere between 5 and 20 properties. So they have one master LLC, which is called ABC LLC. Below each series or cell is like the name of the street. So for example, I live on Monteoro, so I have the Monteoro series, right? So depending on the address of the property typically is what the series of that LLC will be. So again, you'll have one main company and you'll be able to separate those properties underneath one structure. So therefore you only have one tax return. But the difference is now is we don't have 10 different LLCs that we have to form, open up bank accounts for, maintain. All of it is underneath the umbrella of one LLC. So that means there's one annual renewal each year. There's one potential tax return that would need to be filed depending on how that LLC is structured and set up. But that way you can separate all of the assets that you have, because if you do have more than one and something happens and your general liability policy doesn't cover it, they could potentially go after any of those assets that are inside of the LLC. So that's why we like series LLC. At Wyoming, Delaware, Nevada, North Dakota, Montana, Texas, those are a few states that offer them. We do a lot of business in Florida. Unfortunately, Florida is not a state that recognizes them. So you can form a series LLC in Nevada or Wyoming, which I'll talk a little bit about that briefly. But if the state that you have those assets and properties in, if they don't recognize the series LLC, then you still will be in a position where if you want to separate them individually, you'll need to have separate LLCs for that.
Now, one thing that you mentioned, one thing I want to point out. So if you're in a state that doesn't have the Series LLC, technically, if you set it up the right way, you don't have to do separate tax returns for every LLC. They could be pass-throughs to like a holding LLC. Is that correct? Or yourself?
So, Lynn, you want to answer that one as far as the tax part of that?
Yeah, that's correct. So you set it up a certain way that these entities can be disregarded, the sub entities, and then they can have a holding company at the very top where you file a single tax return that basically encompasses all of those sub entities together. Like Brent was saying, if it's in a state that doesn't allow for series LLCs, you could be looking at setting up a bunch of different separate LLCs, where if it's a state that allows a series, you're saying you could use a series structure where you're implementing one series with a bunch of different cells and incorporate that same structure, Mark, where they have essentially a holding company within this series structure. You're still filing a single tax return. So you can set it up many different ways, but yeah, you can keep it simple for tax purposes. And that's often what's done with real estate, and you can handle that the way you want to.
Interesting. Interesting. That's thanks for sharing that. Um, is there any question that I did not ask you about LLCs before we go on to the next topics that I should have asked?
No, one thing I want to talk about with the LLCs, and we're talking about the holding companies. There's a lot of clients that we've talked to, especially this last year or so, with the relationship that we have with Mark, who have already formed entities in their home state. Because a lot of times when people form corporations or LLCs, they'll go online, or they may go to a local attorney, And for the most part, they're not giving you recommendations, especially online. They're just asking you what state you want to incorporate in. And most people will just put the state they live in because that's what makes sense. But you're free to choose any state you wish to incorporate, regardless of where you live. So what we do with a lot of our clients, ultimately, we have the holding company in either Nevada or Wyoming. I actually still, to this day, prefer to register my clients, even their operating entities, in a state like Wyoming or Nevada, and then register it to do business in, let's say, Florida or Texas, and still have that owned by the holding company. And the reason being is because Wyoming has a little bit more privacy. They don't put everything on public record. There's no state corporate tax there, so you're not paying any additional tax fees. Basically, you're just paying the state to renew each year. And in the state of Wyoming, just to be transparent, the renewal, the hard cost alone without registered agent is $102 just for the actual renewal. So we're not talking about a lot of money when it comes to the actual renewal and having it in your home state. So it's the same thing as having your LLC formed in Florida or New York or Texas, but the difference is it's a Nevada or a Wyoming one that's registered to do business where you live. The reason we like that is because the corporate veil and the statutes in those states are completely different. Every state has their own different statutes in their legislation. So in Nevada and Wyoming, it's very difficult to pierce the corporate veil. So procedurally, if something happens, you may get sued in, Saratoga Springs or, Volusia County or wherever, but ultimately the corporate veil and the structure of the business is going to come into play. So that's why we still like to have the operating entities and even the holding company in those two states, because it doesn't cause any additional tax burden. The only negative, there's pros and cons. The only con is that you have that renewal in that state, and then you also have to renew in that state that you're operating in. The other thing that you can do, as Mark mentioned, is if you have entities already in place, we can form a holding company in Wyoming or Nevada to actually own the interest or the certificates of the LLCs that you currently have, which will give you a lot more protection, keep the interest out of your personal name in the event that you are ever sued personally. One thing that I have never mentioned on any of Mark's podcasts is the Nevada LLC or incorporations. And that's because we've been doing a lot of Wyoming, because Wyoming naturally provides privacy because they don't list the managers and the president, secretary, directors, treasurer online. Nevada does. Nevada's also been around, 70s and 80s, and Nevada was built in a different generation, a different way. I think we all know kind of how Nevada was built, the casino, the strip, the business owners. They wanted to make sure that they were protected. They wanted to remain private. So Nevada offers what's called nominee service, where you can actually hire a nominee, and on public record, if you have a corporation that's your holding company and you want to do it in a state that's been around and a little bit more proven than Wyoming, then we can come to Nevada and actually hire a nominee. So I'm actually the nominee on over probably 100 companies here in the state of Nevada, where if you pull it up on public record, it says Brent Carlson is the president, secretary, treasurer, and director. And then what I would do is I resign and appoint that power to the actual owner of that holding company. So on public record, they don't see Mark Monroe, they don't see Lenny, they don't see anyone except Brent Carlson. Then when they type up my name, they see all these different companies. So at that point, I'm able to kind of play the middleman in the event that there is a lawsuit. It would come to me, it would come to our company. I would have to look at it. We would get involved and help you and kind of guide you on how to handle it. But it gives you that privacy in a state that's been around a little longer. But again, Wyoming has adopted such similar statutes that we are comfortable having that holding company in Wyoming and not worry about filing in Nevada with all those other president, secretary, treasurer, and director. Because obviously, if we have a nominee service and I put my name on there, we have a fee for that. And again, going back to what's best for the consumer, if they don't need that, if they're not worried about having anyone listed on public record, then we will typically go with Wyoming for that purpose. The last thing that I'll mention about the LLCs is if you currently have an LLC in place, depending on how long you've had it, I would challenge you to either contact us or maybe look up with Dun& Bradstreet and see if you have a credit rating. A lot of businesses, a lot of companies that I've worked with for years. I mean, I have a guy in Wyoming does $20 million a year. His credit score for his company is horrible. It is absolutely it doesn't exist, and that's why, because the reason being is business credit operates completely different than personal credit. So when we turn 18, the only way for us to build credit is go get credit cards, either make our payments on time and make it great, or fall behind and screw it up. And I was one of those when I was younger. I didn't understand the real value of credit, and I learned the hard way. And then once I figured it out, I thought there's some really good advantages and reason why people have good credit, and getting those double cashback cards and just doing things the right way. And again, taking that for granted did cost me a little bit financially earlier in my career. So what we do for our clients, and what I did with Corporate Capital when we formed back in 2013, is I built the credit on the company. So I registered my company with DMV. I got a Paydex score. What we did for our office is we ordered like our paper towels and toilet paper and some of those essential items you need, whether you have a business like mine in a building, or if you're just watching this from your home and you don't have a commercial space. The items that you can order to build the credit for your entity are things that you're using every single day already. So now we want you to do that through the business, through an operating entity. Again, depending on your structure and what you're doing, have that done through one of your LLCs, because after that 3 to 4 month period of us helping you build that credit, we are able to put you in a position where you can go and apply for credit cards, line of credit. My wife has a Denali. I mean, not to get too personal, but they gave us a $1,200 a month payment in our company name because we had good credit. So we were able to separate ourselves from some of those assets, and so from some of that DTI, because everything was done in the name of our business. So we like to position our clients that way if they need that additional capital. Now, if they don't need the capital and they don't want to go through that program, obviously it's something we don't need to do, but it is an option. And for a lot of people, and I talked to someone from the group that's just starting in their 20s the other day, not a lot of money, just trying to get started, wondering, do I need a financial advisor yet? And I'm like, you're not at that point. What you need is proper structuring, and then ultimately you need capital. And so that's where these types of programs and benefits of having an LLC and building the brand and the credit properly will be able to open up some of those doors and give you the possibility. And again, I'm a walking example of that. With that loan that I got back in 2013, bought all my computers, all my phones. It paid my first and last month rent before we bought our building in 2020. I had to do those things to start my operation. And then luckily, 2 months later, we were able to pay off that loan, and there was no early prepayment penalty. So once we help our clients build the credit on the company itself, we have a funding department, and our funding department will look at different deals for you and different lenders in the event that there's some money or capital needed for your guys' next project.
That's great. I didn't realize you had all that stuff. Um, so just I want to just plug your phone number here real quick. It's Corporate Capital 855-767-1977. That's 855-767-1955. I do want to ask Lenny a question back when we were in the LLC conversation. Um, um, you mentioned there about when you're setting up an LLC and you're having it set up in Wyoming, but you may have a property, like say in Florida, and you mentioned about register it in Florida. Why is that so critical to register, Lenny? Why is that so critical to register in Florida if I have a property and it's a rental here, but I have my LLC in Wyoming? Why do I need to do that?
So mainly it's the rules. I mean, if you're operating a business or or a rental property in Florida, Florida expects you to register there. It's like Brent was saying, we're wanting to capitalize on the favorable laws of the LLCs in Wyoming. And so that's why he was setting up that, where I talked about set up a holding company there. But Florida still expects you to register in their state because that's where the property is located. So we're meeting that requirement. But at the same time, we're weaving in Wyoming or another state if we feel it's appropriate to capitalize and make sure we have the most asset protection that we can from that LLC. Basically, take into or capture all the favorable benefits of that state that we're plugging in there. But that's the main reason why we also are incorporating a state like Florida or these other states that maybe we're not focused on with the LLCs themselves.
Got it.
You,
Got
you
it.
know,
And
one thing, Mark, I'll jump in and say, because we're dealing with California, like California, for example, and I'm sure there's many of you on this podcast and video that are in California. California, let's say you had a Wyoming entity and your property was in Florida, registered there. California still expects you to pay that $800 a year franchise fee. And so in California, that's why they're the fourth or fifth largest economy in the world. They have just so many different fees. Their taxes are outrageous. I disagree with that, especially like clients who are looking to do private lending and setting up an entity in Wyoming. There's really no assets there, but the fact that they live in California and they breathe that air, California expects to receive that $800 a year franchise fee. So, we look at that, and because Lenny mentioned the reason we register that entity in that home state, you're going to still deal with some of those taxes and some of those fees anyway. So since you're going to deal with that, instead of making it a domestic Florida or a domestic California company, like in California, for example, the corporate veil can be penetrated a lot easier than other states where they can go after the owners personally. And so again, we don't want to necessarily form a California LLC, but our construction company is there, or we're doing our rental properties are there. So we want to make sure that entity is properly foreign filed there, so you're in compliance, because if it does ever hit the fan, or you have the slip and fall, as Mark mentioned, or the mold or any of that, now you have a lot more protection, unique protection that California wouldn't offer you.
got it. Okay. Yeah, because I've heard also like if you're not registered there and you try to have to evict somebody, the court system is just going to throw it out because you're not registered there and you're not in compliance in that state. I've heard that before. So, anyways,
California will give you a hard time and do whatever they can. That's why we like to stay on top of that, just to make sure they're in compliance. And then if they do need to be registered there, we'll look at that and say, this is what you need to do. We'll give the recommendation. There have been times we've talked about it. People have elected not to register there and kind of roll the dice. But our job is to make sure we educate and tell you exactly what you should do, what is expected of you. And then ultimately, we go from there with our customers. I know. And you know what, people, I will tell you, Mark, you got a really strong name for yourself. People care about you. We talk about that. They bring it up. I don't ever share your personal stuff, but everyone's generally concerned and really respects you. And it's been a great group to work with. And like with Andrew and Lena, because of this type of time that we spend with them, they really see the value. So I appreciate you pushing us hard. We'll continue to take good care of them. Lenny and I are, a great team, and we appreciate the partnership that we have with you. Yeah. So thank you for this opportunity.
Yeah. And I appreciate you guys doing all the work too on my end for my stuff personally. So thanks so much, gentlemen. All right.
You're welcome.
Take care.
Take care. You guys have a good day.
You too. Bye-bye.